Hello, this is Martin from Secrets, the channel for learning about trading and investing. Welcome to Markets Next Week, the weekly stock market analysis show where we look at what happened during the week in the markets and how we can look forward to have a better trade plan for the next day. And this is analysis for May 30th, the week starting from Monday, tomorrow, 2022. So let's get into it and see what does the chart say. So we see a bullish hammer here. That's almost at the end of a down move, and it could potentially give a bounce upside, right? If the price is moving out this current candles, solid candles above. And Banknifty, you can see a wide range second week of bullish movement. Clear bullishness is evident. The bounce up that has happened from the previous swing low. So remember that Nifty had made a previous swing low, but has not breached that. But Banknifty, it is still if close to close basis, if you see it has made a new swing low, but with the wick, if you consider, it is little far. So basically it has retested the previous swing low on both, but does not concisively breached that, you can say. So it has taken a support and then bounced up is basically what has happened on the weekly time frames. Daily time frames, look at this, it's a hammer pattern, again a wide range bullish gap up. Both are a gap up. Gap up means it's a clear indication of the bullish on the short term. So in the daily candles, you are seeing a gap up bullish candles. Right? So clear bullishness is there. Remember, there is also an outside and inside. If we have a Bollinger Band here, it's an outside inside. Volatility divergence, which is also bullish, and we can take it to twice the move from this swing to this swing high. It can go to 70,000 for sure, right? If it works out. If this breakout happens from the neckline of this. So remember, there is a major resistance here of the gap, and if only that gap is cleared, you can say something. The Banknifty, that gap is cleared, and it is many times more bullish than the Nifty. So Banknifty clear bullishness can be evident. You can see that trended up move, breakout with gap up move is there, but Banknifty, it is just at the same place where it is facing heavy resistance. So keep that in mind while being the bullish at the same time, right? So moving average, if you see, it's still so it is closed in the daily time frame. It is closed above the median, and on both the time frames, it has closed above the medians, which is positive, right? 20 that's a 20 moving average above as close as happened, which gives a bullish bias. But remember that it is far away from the 150 and 200 EMS, which is quite far away. So at least 17,400 levels. You still have the moving average resistances up there. Same with the Banknifty also. You have, although it has cleared one of the gap resistance, which Nifty has not done it, you have another gap resistance that's coming near 37,400 nearby range, right? So a close above 37,500 is crucial. Similarly, a close above 17,500 is crucial for the for us to talk anything about the end of this downtrend, right? But overall, if you see, it's a downtrending channel breakdown is what is happening. It has still not come out of that. So basically, we just had 0.5% move or gain the last week of the Nifty, but look at what Banknifty has gained. It's 4% of 1,340 points of gain has happened. That's a big move that has happened in Banknifty. And clear wide range bullish candle is what in the weekly basis you are seeing. Weekly hammer means the wick size indicates there is a good support from the downside that's there from the bulls. And daily time frames, if you see, indices are all with a gap up of greater than 1% up more bullish candles formed. Volatility divergence is there, right? But there is a gap resistance and a 50 DMA resistance is there on the Banknifty. So that's what we have to keep alert on. Volatility, if you look at, you can see that the close above the median is bullish, but the downside move has halted or paused for a while, you can say. You can clearly see that there is a volatility contraction that is there, and the trend has gone sideways from the bearish zones now, and there is more potential for the upside to happen because of the median above price close that has happened, right? So sideways momentum with bullish bias is what you see in the Bollinger Bands, right? And let's look at the Nifty support and resistance zones. So support, the immediate support will be 15,850 to 15,950. That's 60-minute retracement levels. If that breaches, then you have 15,500 to 15,650, and then further down at 15,350, 450, and then 15,000 on the downside. On the upside, the resistance first will be 16,350, 16,450 to 15,950. Above that, you have the gap resistance 15,550, 650 first, and then 16,750 will be the resistance. Then above that, 16,800, 16,900, Fibonacci 38, and above that you have 17,000 rounding number resistance. That's the Nifty. Banknifty coming. The first support would be 35,000, which is Fibonacci 50 retracement. If that is breached, then 34,350, 34,750. Then if that is breached, then 33,600 to 34,000, Fibonacci 60-minute retracement. That is. Then you have 33,000, which is previous swing low. That's good resistance. Then you have 32,400, 32,800. Then below that you have 32,150, which is the previous swing low nearby levels. And upside resistance would be at 35,600, 800. So resistance first, and 36,300, 36,800, Fibonacci 38, and then you have the gap resistance, which is clearly at 37,500, which is Fibonacci 23 retracement also. So, right, so levels look out for the 37,500 and 17,500 levels. Right. Moving on to the momentum trend analysis, the momentum is showing that it's sideways momentum. Right. So Nifty has climbed to the sideways, I can say. On the both time frames, it's that's in the medium term and the short term. Both time frames are rising momentum, and then it's sideways momentum, not bullish. And Nifty also, that's the same as the case, but now divergence are the same in the momentum, you can see, right? So you can clearly see that it has taken a range shift concept, right? In the RSI indicator, range shift has happened from their remember when we talked about range shift, we said that it's likely to be bullish, which has not happened in the Bank Nifty, but Nifty, it has shown clear bullishness, a range shift, and then bounce up, which is very bullish, and it could take it further ahead. While the Bank Nifty also, the momentum is rising, and also in the sideways, rising towards the bullishness, but not at there. Medium term also it's sideways. Trend indicators are saying that ADX, DMA negative is what Nifty is still, but Bank Nifty is already crossed over to the bullish zones, and the momentum is rising up. But the momentum bearishness is falling down in the case of Nifty, so it's likely to get a crossover in the coming days, and then Nifty also will be DMA positive. But as of now, it's still in the bear zones. Nifty, Bank Nifty is in the bullish zones, short term. Medium term also, both are remain in the bearish zones itself, as far as the trend is indicated. So it takes some more time for the crossover to happen, and that the trend to reverse. Coming to the volatility and the open interest analysis, volatility, will look at that. It was a 7% of down move that has happened, and now it has now cooled off. The index, India VIX volatility index, fear and greed index, has cooled off to 21.48. So you have to be cautious because it's still above 20 and can spike back to where it came from. Right, so that can clear. So it's a big call off, and the market has shot up, bounced up from the support zone. That's what you see there as far as volatility. Right, so volatility is not fully cooled off. Fear and greed is still there. Uncertainty is still there. You have to be still cautious. Open interest data, if you see, it's short covering that has happened in the futures open interest data. Right, short covering is bullish, right? It can give big up moves. It's reflecting the same in the last week also. The same that happened both indices. This week also the same. So bullishness is evident. Open interest data for the June 2nd weekly expiring in the next week is actually options data. Open interest data we'll be seeing the next slide. The full put call ratio for that is bullish, 1.08 and 1.17 for the Nifty and the Bank Nifty respectively. So PCR is bullish, or futures open interest is bullish, VIX is cooled off, and look at the OIA for the options data. You can clearly see that there is Bank Nifty is clearly bullish with the highest number of put rating is what is projecting out, but Bank Nifty some slight difference between the highest put and the call. Slight bearish, slight difference is there. You can see, we cannot say it's bearish. Look at the level 16,000 and 17,000. So the option writers are seeing the highest support and resistance. 16,300 and 16,300 itself is where the highest put and call both are written. So for the second highest, you can say 16,000 and 17,000 where the price is going to move in the next week. 35,000 and 36,000 is the highest put and call rating for the Bank Nifty. 32,000 and 36,500 is second level of highest put and call rating. So put call ratio in futures is already showing bullishness. So this is options data that you have seen the levels, and correlate these levels to the support and resistance levels that is studied in the marks in the charts at least. Sectorial study, if you see, IT sector has closed 0.5% down, metals has 0.5% down, pharma is 3% down, and reality is 3% down. So FMCG auto is doing good. Metal has got the big blow of 9% down, right? So we'll study each of that. See, look at this. The IT sector continues to fall down, and it is a further 0.5% down that happened last week, right? So it's bearish momentum that is there for the IT sector. Look at the metal index. It's at a support zone, right? Remember, it had the momentum is also at a medium-term support zone. You can say it has not breached that. So any breach from here on the metal will be disastrous, because the 9% is a big fall, right? A big fall that happened last week, and previous to previous week also you can see a very big fall has happened because of some global cues, right? So yeah, so there's no way, short term is bearish actually, right? So auto is showing bullishness. Look at the breakout that's happening from the previous consolidation zone. Remember, there is resistance of 2017 resistance that is there, big resistance where it got hit 2-3 times and then fall down. So you have to see whether this is going to break out that today. Momentum is sideways, and it's bullish on the auto in the short term. So only sector that's bullish as of now is auto. If you pharma sector, if you see, it has taken a support and then bounced up, but still facing a lot of resistance in the momentum side. You can see a red bearish candle that has formed. What we set the support and the weekly time frame at sideways itself, but yeah, so overall sideways momentum is what you see for the pharma sector. Auto bullish and bearish mix, and short term bullish. Metal bearish, IT bearish, you already seen that. Looking on to FMCG, we can see that there is good move that has happened. So remains sideways. So pharma, FMCG and auto is doing okay, right? IT is doing very bad. Metal is also not doing great, and reality also not doing great, because reality, you can see that it is at a major support zone. Any breach from here will be dangerous. It has not yet gone there, but moment has already slipped to the bearish zones. Right? Three sectors are doing good: auto, pharma, FMCG. Right? What is not at all doing good is IT sector. Metal is also following that. Reality also following. Right? That's how the sector is study. So we may look at going for longs in the auto sector from the sectoral approach of strongest stock and strongest sector and strongest stock. That approach, if you see auto sector, the stock picks may be done, but remember the bullishness are not yet come in the momentum perspective in the weekly candles yet. So it may make sense to be confident to wait for that as well. Right? Index heavyweights, if you see, look at the big bounce up that has happened after clearing out the support zones from where it had slipped down. HDFC showing great momentum. Momentum is set in the sideways zones, so that is very positive, and the candle is super bullish and got back into the trend line channel inside also, and then back to the up more is what it looks like. If HDFC is yet to climb in resistance on the upside, we'll have to see whether it's able to cross about this. Now the next question: any more about this green candle may be a good thing, but there is a gap that is going to come at this level. You can clearly see there is a window gap from up here, so it will be very crucial whether this gap will get closed or not in the HDFC bank. HDFC is still, although it has climbed in the sideways zone, it is yet to clear that major resistance. So there is a big comeback in the sideways zones on the bearish zones in the two heavyweights, HDFC bank and HDFC. Lands some pullback of some resistance down play in the momentum is what you see. That's why you see a red candle there, but that's after a big bounce up that has happened from the neckline of the cup and handle breakout. So it could be taking a pause and then after some time make. So any close above this fixed candle high would be clearly indicating that it will make another all-time high. But as of now, momentum is sideways for both. So sideways moves in all these three major indices, and then comes the IT sector. IT sector is on some green on the Infosys side, but remember it's in the bearish zones on both TCS and the from the momentum perspective on the TCS and it, both of them are bearish. So remember we had slipped in the bearish zones on the momentum. TCS has slipped from the major support zone where it was holding for a long time. It's in the edge of the channel, so we have to closely watch whether it will be able to climb back or not. Right? At least the momentum has to move in the sideways before we can say anything. IGC buying is also showing bullishness. It's a 40 RSI support and then bounce from here on the medium-term weekly charts. It has taken basically the support as the price of the ascending triangle neckline breakout zone, and remember it is at a major resistance zone, and any move from here would mean that it is back into the rally. We have to make a note whether this momentum is able to climb the bullish zones before we can take any bet on the IGC bank. Kodak Bank, look at the bullish move, but remember it is at the resistance zone. Kodak Bank had been consistently performing since the last 4 weeks, and after it has consolidated the major support zone, which it has been holding for several months, or more than months, probably years, I would say. This support zone is very good support. Only question is, will it break out from this consolidation that is happening over several months now or not, right? So it will be cautiously bullish, but it is uptrending for the last many weeks. Right? Only thing you have to keep watch is the resistance zones where it has faced trouble earlier. That's what you have to look at. Now, institutional participation, if you see, so that's about the index rates, right? Institutional participation of the foreign institutions and domestic institutions. You can see that 9690,000 crores, 9,600, nearly 10,000 crores of selling has happened from the FI side, but the buying has happened more than that. 11,250 crores of buying has happened, and net long on the derivative side also is net long. You can see, right? So the continuous selling of the FI is the concern, but they is exceeding that in the retail confidence in the market is positive, but FI selling worries continues. Global markets, if you see, look at that, right? So US markets, if you see, Dow Jones has given a very good bounce from the edge of the parallel channel, right? Very bullish, super bullish. It's 7% up more or something, right? Same as happened on the Nasdaq, same as happened on the S&P 500 also. The moment it was basically climbed from the bearish zones into bullish. Now it may retrace a little bit to get the RSI support zone at the 40 on both, and then it can bounce up further. That's what it looked like. So some consolidation for the next 1 or 2 weeks, and then up move may be positive. So US markets bounced up 6 to 7%, which is 7% on Dow Jones, Nasdaq, and S&P 500, which is good. Right? So yeah, so remember it has corrected 30-35%, and any further down move back from where it had fallen to anything beyond this 30,550, 30,600 zones where it had slipped down. Any slip from here would be negative. So that's what you have to keep a close watch. It may take some time for it to take out this momentum from where it had slipped down. Keep a close watch on that also. So this data has to be seen on the US markets will be open only for tomorrow. So Tuesday only it will be detailed move on the Dow Jones would be useful, but you can close watch the Dow Jones futures data, which can get traded earlier to that also. Right, so keep a close watch because any big moves that are happening here, obviously it will reflect on our moves. If the moves are consolidating and slow, it may not impact our markets, but otherwise you have to keep monitoring these indices very closely. Crude oil, if you see, this is what is happening. Right? It is again spiked up, right? And ran 13.7 is what, right? Hit a 13-year high, 15-year high, and then cooled off a little bit. Now it is hitting towards that. So there is no slowdown for the crude, no consolidation, nothing. It's simply rising above small retracement that happened below the 100 level. So until it goes below the 100 levels, there's not going to stop. So gold, if you see that it has given a very good bounce, right, from the near the RSI support at a major support zone, and it is climbing slowly and steadily above that. But remember, they have a major resistance at 1970 levels. The question is whether it will be able to clear that resistance or not. But cup and handle still holds good. Momentum has gone sideways in the medium term, but it has climbed back. Right? So it's basically consolidating. Sideways means consolidation moment. Price action is what is happening in the gold. So that's about the global commodities. Just to wrap up, gold has moved down and moved up, which is positive but slow. Momentum is sideways. Crude has moved up, which is not bad, which is not good for an economy. It is once again heading to the all-time high, 120 kind of plus kind of levels. Rupee has weakened. You can see that. So this chart we didn't explain. US dollar has cooled off. USDINR has cooled off a little bit. How much has it cooled off? Yeah, it's a 0.3% down more that has happened. 77.6 it is, but remember it is at a very all-time high levels, and then it's not good, right? As long as it does not cool off this support zone, at least 75 nearby zones, right? And dollar index also has cooled off. You can see the last 2 weeks of big downfall has happened, 1.5% each. So 3 to 4% of down was happened. 101.6 is where the dollar level is what you can see. So some cool off in the dollar index and the USDINR also, but still it is at a very high level. Same crude also, it is shot up further and heading right? Consolidation is not happening, momentum is rising, and gold is kind of consolidating. So that's a global cues. So rupee weakening and gold and crude rising and dollar strengthening is not great. That's what you have to keep watch on. Stock 2 Mahindra and Mahindra long weekly candle is what you see. Cup and handle breakout is this is not clear cut given the signal, although it's in the bullish on the medium and short term. It is still not given the buy signal. The buy signal would be only after it clears the all-time high levels, the neckline breakout zone. Only if you get a price confirmed to close above that, that's where you have to enter. It could give swing positions up more. It could be a big breakout, right? But keep the neckline as a stop loss. In this Unilever also is not clearly given the signal, but it's evident that it has given a very good bounce on the weekly basis, and it's at a resistance on the moment. The resistance of at 2459, that kind of that candle high is clearly a close above that clearly indicates that it can move further up to the candle, the trend line channel top. That's a very good move to the near to the 2900 kind of range. That much of big up move can happen. Maybe slow, can be position also. Position and swing, with the sun Unilever long. That's what it's seen. Momentum is good, trend is good on both the stocks. Mahindra and in the sun Unilever long calls for swing trades is what that could potentially work out based on the parameters that we have studied: price action, momentum, and the trend indicators, right? So this is another strategy setup for the payoff chart for that. For the Nifty indices, you can see that it's giving a reasonable 77 kind of percentage kind of probability of profit, and the risk reward ratio also may not be bad on if you're taking the profit restricting to 2%, 2 to 3%. It's giving a very good wide range. It's a 1,000 point range of 15,700 to 16,800, more than 1,000 points. So it's very unlikely that the price can move beyond that, for the next week, because consolidation was what is basically happening. And the lot size can be based on your position size, and the VIX, if VIX is rising too much, then cut out the position size, and this can give the advantage of the spike. If there is further spike that is happening from this 20 levels, 21 levels to again 25, also it can benefit from that also in the coming days, right? So overall double counter diagonal spread is what you see on the Nifty. This strategy basically you have to sell to near expiry put and call, and then buy hedges for that on both sides for the next expiry, weekly expiries, right? So that's what the payoff. You can also do adjustments in case it breaches. Big moves happens, you can always adjust by rolling up and rolling down, whichever side the price is moving up or down. So the wrap up, mild bullishness is what I have based on the many things, many factors that we already see. I'm just consolidating all that we discussed. So we have a hammer pattern which is good, wide range bullish candle. The both are on weekly on indices, which is very positive. So 15% correction has happened, and then we have bounce. That bounce is very good, right? Consolidation, what is basically happening, right? The bounce shows that we've probably found another swing low which is higher than the previous swing low, so it's positive, and it may have found bottom and then it's trying to move up. So consolidation may be what that may happen, right? Because Bollinger Bands are clearly showing its contraction. Momentum is crossed over to the sideways, right? Trend reversal is happened in banks, and banks are very strong as compared to the Nifty. So banks are leading major components in the Nifty also, right? And short covering futures open interest is what you see. Short covering are obviously good from the long perspective. VIX is greater than 20. It is cooled off actually, but still about 20 is concerned. That is what you have to be cautious. It's still near a 50 DMA, and it is still resisting below the major gap resistance. All this we have to be cautious about. But mild bullish is the view. So US markets are showing a very good attempt of recovery. US markets is great dependency on us. That is good. Yeah. So repo rate hike. US Fed index. US inflation. War that is going on. All these uncertainties. Crude is high. Rupee weakening. All these uncertainties still there. That's why the VIX is not cool off. That's the concern. That is what you have to be cautious about. The positive factors, if you look at, is that it is getting good retail confidence. Money is flowing in, although the FIs are pulling out the money. Retail see the economy improving in the future is what clearly visible when the DIs are buying. Right, futures are showing good short covering. At a major support zone, it has taken a bounce. Bollinger Bands are consolidating, so that's all positive. VIX has cooled off. So, at the same time, because of the facts that the uncertainty is still there, you have to be cautious. Levels to watch, we already know: 18, 150, 38, 500. 38,800, right? Two levels for the medium term up move is what we are talking about, not a short term. 15,650 and 32,200 is what you have to watch in downside. So the only thing is, what you can do is protect your risk. How do you protect your risk? Cut short your resistance size if the VIX is rising up. Take hedge positions where you know what exactly you will lose. Right? You just have to keep a note of playing the strikes in the options if you are doing that, or based on the support and resistance levels that we have studied. It may not work out, but that is the only thing that we can do. Right? What is the more probability that it can breach this? What is the more probability that it can hit resistance there? So that's the kind of study that you have to do, and take the positions. If it loses, you lose it. But you know what you will lose if you are hedged it. Right? You know how much you will lose if your position size is less. But if your position size is succeeding, if you are not hedged, you can wipe out your capital and you will no longer be the game for the future good days that may come in later. Right? Similarly, long positions, quality stocks, investments that is done can be hedged with option strategies, and you can recover the losses and then still be in there instead of selling it off. That can be done if right. You can hedge them with gold or option strategies, and different ways of doing that. If you're not aware, you can look at the playlist and you have a lot of videos on that. Right, so protect your risk with hedge positions and apply safe. Right, but yeah, mild positions is what I have for the next week. I hope this helps you to frame your own view for the market for the next week. And if that helps in some way, if you're not subscribed, please subscribe right away. Consider hitting the like button, putting your comments, feedback, and share it to maximum so that we get some subscriptions. We have very few, and appreciate your help in this regard. Thanks for watching. Happy trading, happy learning. Bye.